Hey, y'all. This is the War Room for real estate investing, where we talk about everything that we can do to help make your real estate investments more profitable. So, this week, I want to go over a couple of news headlines that I've been seeing out there in the markets. I know we've seen a lot of headlines about interest rates, about demand, but let me share my screen and show you guys a couple other things that we are seeing out here um, as we go through the market today. Okay. So something that I've seen is headlines like this that catch my attention. That it covers up a little bit of data where right now home builders are. I mean, anyone involved in real estate, whether it's your loan officer, your realtor, your title company, your escrow agent, they're all saying, hey, it's a good time to buy in real estate. When others are fearful, you should be getting in. And to some extent, that's true. But like on a bigger way, I think my larger vision of the market is that we're kind of right in the middle, and I see headwinds for a little bit more of a decline in price in both the residential and multifamily commercial markets before we see an uptick. Now, I do eventually see an uptick. I don't necessarily see leasing rates declining very much, at least in Texas, because people are still moving to Texas. But I am seeing, prices continue to come down. And the only people that are selling right now are, motivated sellers that are motivated financially, or something else is going on in their life where they have to sell a property. That's what's sitting on the market. So right now I'm looking at, mortgage rates buy downs by home builders, and they're propping up sales. So if you can imagine, a $500,000 house that just got finished by a new home builder, they started building this home when interest rates were, 3%. These are adjustable rate construction loans. Now that interest rates are 7 or 8%, not they're bleeding money. They've got to get this house off their books. So they're discounting the price on these homes. But the trouble is, if you're a home builder and you're building, 100 homes, if you sell one at a discounted price, the person right behind you is going to say, well, this is the new comparable. This is what the house price is now that it's at, 450,000 instead of 500,000. I only want to pay 450. And so what the builder is going to do to make themselves look good is they're going to say, we'll give you an interest rate buy down. We'll pay $50,000 towards your closing costs to prepay a lot of your interest that first 1 or 2 years with these, year 1, 2 buy downs. And, sometimes you can get like 3, 4, 5% interest rate the first year, but then it goes up, in years 2 and year 3, where it kind of either stays fixed or could be adjustable after that. And they basically get to keep a $500,000 home price in exchange for prepaying $50,000 towards your interest the first couple of years and to buy down your interest rate long term. Now, financially, it ends up being about the same. I mean, I did do an article where, long term, having a lower interest rate does help out. But in the long term, in the next, 4 to 8 years, do we think interest rates are probably going to continue to go up higher, stay the same, or go down? My vote, if I had a crystal ball, is to say it's probably going to go down because of what we've seen in the economy. I think a lot of things are breaking. Banks are shutting down, that we saw earlier this year. We're having unemployment, which is really the last lagging indicator that's kind of on the rise. But businesses are struggling. I go into some meetings where I hear people talking about the difficulties of cash flow and how much runway they've got left. So the next step is, hey, if you're having trouble in your business, it's time to start laying off some people if you can't increase the revenue. So this is an interesting way that, artificially, I think the prices are even a little higher in the home market than they truly are because they're being propped up right now. So, here's another thing that I want to kind of talk about. Right now, we're seeing people are still moving to Texas in general. They're leaving some of these higher tax or expensive states to move to Texas. Austin, in particular, has had a lot of growth in 2010 to 2021. And then last year in 2022, it still had growth, but it had less of a growth than the surrounding counties. Now, this article here says that 6 of the top 10 largest growing counties in the country were in Texas. So we got Harris, Collin, Denton, Fort Bend, Bear, Montgomery. They basically had a ton of, properties. This is like total properties that total counties that gain population. The fastest growing by percentages here is going to be Kaufman, Rockball, and Parker County. So we're seeing a lot of growth still come to Texas, even though some of these, even though people aren't necessarily buying homes. They're just going to like the smaller counties outside of, Austin itself. So what I'm kind of seeing here is that home builders are facing a tough situation where they're in a bit of a difficulty selling these homes. I've heard a lot of people say that, at least in the Austin area, that they've lost money. Some of these, luxury homes are being built for $1.5 to $2 million, and then they're having to sell for 1.2 to 1.4 million. Let me see. Yeah, we've got a comment. Someone saying they're doing 5%, 4.99 rates, not necessarily 2-1 buy downs. There's lots of different programs and loans out there. So yeah, I would agree that each lender is going to have their own policies about what they can and can't do for these buy downs. So but anyways, a buy down basically will still keep you could either have a higher total price for the house and kind of pay that interest up front, or you could pay to get a lower interest rate, or you could have a higher price for the house, a higher interest rate, and then just pay that interest over time. Or sorry, a lower price for the house, but a higher interest rate and pay that over time. So what I'm seeing with a lot of these home builders is that they're getting difficult to sell some of these homes, so they're really not incentivized to build new ones, because they're really just trying to get the existing product off their books. They don't have the capital to put into new projects, and even if they did, their interest rates would be at 7 and 8%. We're seeing down here, Dallas, for example, 39% deduction in how many new homes are getting started. And it just makes sense. It doesn't really make sense to start new construction on some of these houses right now. Just because, same in the multifamily space, even if you're building, A-class luxury stuff, really that's the only thing you can build right now, because everything else is just too expensive to buy unless you're charging top of the market rents. And so what we're seeing is that these home builders are stopping, but if you started building homes or apartment complexes, it might take you 1, 2, 3 years, depending on how big your development is, to finish these projects out. So if they started building something a year ago or even this year, they might, require another 2, 3 years to build out the rest of that project, or they might just put it on pause. So eventually we're going to see a bit of a pause in what the new product is that's coming on the market. So while prices are kind of going down right now for the next year or two, at some point we're going to hit a low where there's going to be no new construction hitting the market. So that kind of comes to my next point. We see what is it? This one here, the unemployment data. And unemployment has gone up, and this is kind of what we were saying earlier, where if businesses are having trouble with cash flow because of interest rates being high, because of, the average consumer's, inflation of what they're being able to afford and their costs, it's harder for employers to pay the wages to afford these employees. And if they get laid off, they're going to have to search for new work, and it's hard. I mean, we recently went through the process of putting an ad out there to bring someone on our team. And we were, almost flooded with applications because there's a lot of people out there looking for work. So we're having new unemployment coming in. And what I see is that continuing as things tend to get worse in the next year in the economy. And so kind of what I'm seeing in the next year or so, as interest rates stay high, unemployment goes up, and home prices will continue to fall for the next year or so, that will be a good opportunity to come in and buy, as long as you buy deals that make sense and can cash flow right away. At the point that you're buying them, they're already cash flowing. Because if it can work at an 8% interest rate, it can definitely work when the Fed comes back around to seeing that, hey, we're having trouble in the economy. It's time to start lowering the interest rates. It can definitely work at that point. So that's kind of my take on what I'm seeing on some of these. There's a lot of opportunity, I think, in real estate investing. The deal that we've been able, the deals that have made sense this year are where we got seller financing. Let me go ahead and stop sharing the screen here. So the deals that we've done that have made sense this year have been with seller financing. So we got a loan directly from the seller. We were able to do our own terms on the interest rate, when the balloon payment was, whether it was interest only or paying principal. And because of that, we were able to make the property cash flow at a market rate price. Typically we buy a little bit of discount. We did get a good discount on this one because of where we saw the potential for the pro forma. But overall, it's just difficult to to find deals if you're having to do typical financing these days. But I think long term, if you can get something right now at a good enough price, again, the only people that are coming on the market are motivated sellers. They're motivated financially because they have to sell for some reason. If anybody has a 3 or 4% interest rate, they're not going to want to sell. They're probably just going to want to keep unless they've got a better place to redeploy their capital. So that's my opinion on all this. I mean, there's a lot of real estate news. This thing is continuing and developing as time goes on. So, for all these things, I do want the war room to be kind of live. I want it to be interactive. I want people to ask questions and just to kind of see, what's going on out there. If people have, different opinions than what I'm saying, or if people are seeing different things than I am, feel free to, comment and come in here and let me know what you guys are seeing. So, also with this, the Real Estate War Room, I do want to do these live, continuously Wednesdays, starting at 6 p.m. Half the time, I think it's just going to be me talking about my thoughts. And the other half, I do want to bring on subject matter experts to talk about their opinions about things that are going on with, property taxes, insurance, other syndications that are either doing well or struggling, single family home investors that are doing well or struggling. And just kind of all the other people, so that we can have real discussions, because real estate's not an easy business to get in. I know a lot of people have seen it as sexy and attractive and have made money in the last 10 years, but just kind of like with any company or any business, it's difficult to get in, and there's a lot of hair on any deal that you do. And you typically only hear about the good ones until things like this happen in the economy. So I'll just open up the floor if anybody has any other questions. Appreciate what everyone's sharing. We've got Matt saying, hey, thanks for sharing all the good info. Appreciate that, Matt. Chad's asking, this is about earlier, we were saying permanent buy downs, that they were doing advertising 5% rates and not 2-1 buy downs. So again, if we've got, if people are doing, there may or may, Chad's a good loan officer out here in Austin. He would know about these 2-1 buy downs more than I am. I've been out of the game for a little while, but if they definitely are doing something, and it makes sense, it's scary to see a 7 or an 8% interest rate. So if you can say, hey, don't worry about this closing cost over here, just kind of focus on the monthly payment, which is a little lower with this buy down, it makes sense. So anyways, if you guys have topics that you want to talk about in future weeks, feel free to put them, post them as a comment or as a chat. If you have an opinion that you want to share on something like this and want to come on as a guest, feel free to message me, and would love to have you on, and let's talk about how real estate's working and the investing here in Texas. All right. Thanks, guys. I'll talk to you next week.